Good work, Angel. Really putting that extra effort in today. Who has at least 5?
Well, I've never guessed that.
Glad you're ready. Who has 10?
I have 8.
How many did you have, Crystal?
8. 16. 18.
Okay, I'll come around and check your list. Let's do shoulder partners. Let's do, Brandon, count your head. Let's do shoulder partners for you to talk about what a stock is. So stare at your shoulder partner. Stare at them. If we have an uneven, you and Raylene can be partners, Brianna. Oh, Jennifer, you can be partners, tripod. Okay, or Jeffrey. Go with Jeffrey. Okay, stare at our shoulder partner. Stare at our shoulder partner. 1, 2, 3. Earlobe goes. Okay, if you lost, you share first. Go ahead.
Microsoft, Xbox, PlayStation, Apple. I put right back. You would take it off like me. I know.
I'll see you win. Okay, 3, 2, and 1. So, hopefully you guys had enough time to discuss what you think a stock is. Hopefully this kind of reminds us of what we did in the very beginning of the year, right? The joint stock companies that we saw for people coming to the new world. Brandon, second warning. Oh, sorry, it's frozen. So, today we're going to cover the stock market and stock exchange. So remember, when we play our stock game tomorrow and Thursday, I need to make sure you understand what a stock is before I can let you guys create your own stock exchange. So, let's make sure we take all our notes when we finish our summaries at the end. Stock market. We're going to identify what the stock market is and describe it using economic vocabulary. So, just some things to consider. Again, you guys don't have to write them. Walmart. Walmart began as a single store in Arkansas. Do you have some fun Walmart facts?
I know when it was made.
Okay. Nick, this is your warning. Go ahead. Yes?
Does your dad's company still sell?
No, but they were asked to be put on the stock exchange. My dad decided not to, and we'll go over why. That's a good question though. So, Walmart began as a single store, just one little store. Today, the company is the world's second largest corporation. I cited this so you guys know if you're actually curious about my fact. It's the biggest private employer in the world. Private as in it's not owned by the government, right? Government means it's public. With over 2 million employees. 2 million employees. It is the largest retailer in the world. Walmart's owned by the Walton family, who still own over 50% of Walmart. It is one of the world's most valuable companies. Do you have a question?
Yeah. Is Apple the first largest corporation?
I don't know what the first largest one is. I don't think so, based on some other things I read about Apple, though. I don't actually know.
Would it be on the list?
Not on this list. These are just random ones I picked that started really small. Dell. Michael Dell sold computers out of his college dorm room. Dell now employs more than 300 people worldwide. Next, Starbucks. This opened in Seattle, Washington. This was in 1971. 3 partners. There was an English teacher, a history teacher, and a writer. Starbucks is the largest coffee house company in the world, right? So I like this little detail, if I can get it to move.
That was fun.
Well, it doesn't work half the time.
There
There
it
it
is,
is,
Ellen.
Okay, thanks. If you look, these are the numbers just per country, right? So it has a total of 20,000 or over 20,000 stores in 62 countries. In the United States, we have 13,000 Starbucks. Over 13,000. Okay? In Canada, they have 1,300. In Japan, 989. In China, 851. Right? So looking at all these companies, what do they all have in common? Just like brainstorming. Take a wild guess. Renee, I said wild guess, so I'm assuming you'll be able to give me a good one.
I was gonna say because they're all communists, but I remember that we're not a communist country. But I do know that these are the biggest countries for exports and imports when it comes to coffee beans.
Okay, not just with Starbucks, broad scale, but I like how you narrowed it down and used some of our previous knowledge. Kendall.
They all started with
No.
a couple of people.
Okay, so they all started kind of small. Yes, this is accurate. You're on the right trail, Jeffrey.
They all have shares.
They all are going to have shares, right? So they all started small, but they all needed money to grow. So they started small, but from Walmart to go from one store to, second largest corporation in the world, they needed money to do this. Same with Starbucks. So, let's go with some vocabulary so we understand what we're talking about today. You'll see these words as we go through, but these are important things to keep in mind. So, a lot of today's lesson, you just need to listen. I do have points that are blue that you need to write, but most of it is just understanding the vocabulary and understanding how the vocabulary works. So, a stock is ownership in a company. In the stock market, companies sell shares to the public. That means that the companies are actually selling power. They're selling control of their company. For an example, if you buy 250 shares of a company that only has 500 shares, you are going to have 50% of the stock, right? That means you're a majority shareholder. Majority shareholders mean they have control. They often have voting power and privileges like that. So they're a major controller of the company. So example is the Walton family, right, for Walmart. They still own majority share, so they still have most of the say in the company of Walmart. So they haven't sold that many of their stocks because of that. How we identify a stock, this is going back to your vocabulary word for stock ticker, right? So the ticker is its little number, or it's actually letters that tell us what it is. So I'll show you how we can identify them. You can look them up pretty easily online. Most people, if you own a certain stock, you'll remember what they are. Like my dad can tell you stocks for, if you ask him certain companies, especially if they're ones he's invested in, he'll be able to tell you like their little ticker number, the symbol, right? I honestly never remember them. I always have to look them up if I want to know. But some of them are pretty easy. The first one I looked up for you is Apple, because I had a feeling you'd ask about it. So, this is Apple's, right? So theirs is, you can see it right here, AAPL. If we look, this is how much one share of Apple is selling for right now. $536.69. Now, the daily low was $533.79. The daily high was $538. So these sell for a lot of money, obviously, because Apple is a very popular company, as charted, but it's like, look how, this is a small time span, right? This is from 10 to 4 is usually when the NASDAQ closes, which is what this is trading on right now. So, when you look at this, they're quoting this from only a few hours, but it can go up and down very easily. So when we see this, we see a high and we see a low. Now there's a saying, you should always buy low and sell high. So people that are like a day trader, someone that just trades stocks all day, they might be trying to get in on this where when it gets really high, trying to sell their stock so that it's hitting this price. But when it bottoms out, or like when it gets really low like this, you don't want to sell per se, because you don't want to lose money. Now some people would rather sell at this point, because how do you know it's not going to go even lower? And that's kind of the argument and the risk with stocks. Any other companies you guys want to know this, like the little ticker symbol for? The little Starbucks?
I was gonna say Starbucks.
Oh, good. Well, I'm glad we have the same brain. Okay. Oh, that's why. They're S-Bucks. They're only $74.98 a share. I think it's because right now, see how it says after hours? The first one I pulled up for you for Apple, I pulled up before it closed. So it's only 1 o'clock here, but New York is 3 hours ahead. So I'm thinking it's 4 o'clock there, that's why they're closed. Because it says after hours. So this is based on, I'm assuming, what it closed at. Because it's not pulling it up anymore. Maybe tomorrow I'll try to pull up Starbucks ahead of time so we can see if that's accurate. Because Apple I had pulled up ahead of time. Let's try another one. Let's try
YouTube.
So this one I guess is just showing it low for the moment. I'm gonna just assume because it's closed, that's why they're not pulling up. We'll try tomorrow because it's a half day. It'll still be before the closing time, right? Because we'll have class at like 11. We'll try to look some more of them up then. Anyways. Okay, a stock's value. When you own one share of a company, which has 500 shares total, you own 0.002. That's 2.2% of that company. So I remember when we first started talking about stocks, when you talked about, you know, like the joint share stocks and the colonies, I told you guys that I own stocks, right? And I think I told you guys that I had like, right. But I told you some of the stocks I own, and you're like, what? How do you own that? You're a teacher? I remember you guys being really shocked. I own like this, like such a small portion that like I'm not even mentioning it. Like it's not worth anything. Like I might make maybe $5 extra a year if I sell it, right? I'm not making a ton of money. It's not like I own like some of the really big ones. Yeah.
So what would happen if the janitor's closet got burnt down?
That's a whole nother thing, because that's not a stock per se. I mean, that is a share in a company. That's confusing. That's a different type of investment. We'll get to that though. That is a different type though. Stocks are a share of a company per se, but these are publicly traded stocks. We'll go over, that's a private stock, I guess we'll say. We'll go over that one though. Yes?
So in the movies when they're like in that room and they're all screaming, is that what they're doing?
Yeah, I'll show you pictures of that. So the New York Stock Exchange or the NASDAQ, most of those you need to have a chair. You can't just show up and like, hey, I'm here to trade, right? You have to have someone officially be a broker or trade for you, and we'll kind of go through that. So, before a company sells stock shares, the company is private. So Kendall's question in the very beginning, my dad's company is private. They asked him to go public a long time ago, I mean like 10, 15 years ago, and he wanted to keep it private. The biggest reason is that he wants most of the control of his company, right? If he sells off shares, which I think he's done to like a few like friends or like people that we know really well, right? Those people have a say in the company or they can't. He is majority shareholder, but I think he has like 90% of it. right? He doesn't like to give out some because then other people have power. That also means he has to pay dividends. He has to pay them money when the company makes money. The biggest thing is the share is owned by a company's owner. So my dad owns most of his shares, so he gets almost all his profit when his company makes profit, which is like what he wants, right? It's his company. So, kind of an example of it. When people own a share, you guys all own a share of your table, right? So there's 4 or 5 of you that sit at your table. You all have a portion of it, right? You all have a portion of your share. Now, it's not like you can trade and say, hey, if you give me some Takis, I'll give you my share of the table, right? Because you still need a place to sit at the table. I'm not gonna let you trade your share, right? You can't trade your portion of the table. I had friends in college, they all wanted this really big screen TV. So they all pitched in, right? They all paid money for it. I don't remember how much they paid, but they all owned a share of the TV. And the whole time I was like, guys, this is such a bad idea. What are you gonna do? And the next year they moved. So when they moved, 2 of them still moved to the same location, right? And they split it, I think it was like 3 ways, maybe 4. And so when they moved, the 2 people could move with them. The 2 people that moved together, they own the TV, they can move. But the last person, you're not gonna say like, okay, you get the TV every Monday and Tuesday, and then we'll drive it over to our place for the rest of the week, right? You're not gonna do that. So they actually had to pay that person for their portion of the TV. They had to pay back the money that that person had paid for. But at first, when they all lived together, it was a really good idea. Hey, we'll all pay for this. We can all enjoy it. They all had a share in the TV, right? They all had a portion of it. It just kind of depends, right? Depending on who owns it, depends on, or who owns majority, depends on who gets profit from it. So, if the owner of a private company feels the need to sell stocks, the company announces that they will go public. The company's power will be distributed to the people. So like we saw with Apple, right? So Apple isn't completely owned, right? There is probably a board that owns a large portion of Apple, but people can buy a stock in Apple. People can own an individual piece of Apple. But just like when I drew that picture, you will only own, I'm sorry. It's like a piece of a puzzle, right? A piece of a pie, right? So if this is your company, right, this, and if you sell shares, right, these are all shares people can buy. Each square represents a share. Unless you own majority of it, unless you own like all this down here, you have no say. So like when I own stocks, I own like this little corner here. They don't call to consult me before they do anything big, right? They're not gonna call and say, hey, do you think it's okay? We're gonna put out a new product. What do you think about it? They would never call me. They may, like at the end of the year, send me $5 because I contributed, right? Or whatever if I sell the stock. But I'm not gonna get, because I don't own the majority of it. I don't own a large enough portion that I would have any say. Okay, so whenever someone buys a share, the company gets the proceeds. This adds to the company's value. So the more people that are buying this, the more money that's being put into the company. So making the price of each stock rise a little. When people sell their stocks, the price per share goes down a little. So people often get really worried whenever the stock market isn't doing well. So like going back to that when we had Apple, hopefully it'll let me pull it back up. Let's see. I wonder why it doesn't there. So when Apple, right, so it still says after hours for them, but with Apple, when it gets to this low point, sometimes people panic and they think it's going to get really low. And they will call and they'll say, sell, sell, and they'll try to sell them, right? Now, as a public citizen, as a regular person, you can't sell your own stocks. Like, I can call someone, I'd have to call a broker or a company that like represents my stocks. I can't just sell them, or I can't just go online and trade them. At least not that I'm aware of. But I would call someone like my brother works for Vanguard. I'm gonna have him try to come in next week when we come back from break. And he's agreed to come in. He'll explain kind of what he does with his company for Vanguard, but they own stocks, they own mutual funds. So people will give them money and say invest in your stocks. And so when they do that, basically what will happen is someone can call him and say, hey, I'm not feeling really well, like the market's doing well, I would like to pull my money out. So when they pull their money out, that means they're selling, right? Sometimes people sell just because they need the money. Sometimes they might call and say, hey, actually my kid's going to college, I need to pay for it, I need to pull out my stocks, right? The biggest issue with this is, when you sell low, say you bought at the highest price of $538, when you sell low, if you sold at $532, right, you're gonna lose about $6, right? But if that's not too bad of a price. Imagine if it drops $20, $100. Imagine if it drops a lot, right? Or imagine if that company goes bankrupt. You lose all the money you had in it. So in that aspect, sometimes when people are afraid that a company is doing poorly, they will sell. Now my dad always says you don't lose money until you sell. So like in the 90s, stocks did really poorly. So my dad, a lot of his friends would sell. My dad said, no, don't sell. Leave your stocks, the market will come back. As long as you're willing to wait, it's gonna bounce back. And that's like what he says all the time. So even though it got low like this, right? Just like what he said, it bounced back. Now again, this is risky. It does not always bounce back for every stock. It depends on what you are choosing to invest in, right? Say I want to invest in a startup company, they're just beginning and they sell unicorns, okay? They sell stuffed unicorn dolls or like stuffed animals, right? And I'm like, oh, there's gonna be so many people that want this. That doesn't necessarily mean that this is gonna be true, right? Maybe I spend all this money, I own a large portion, right? Maybe I own like a large portion of shares for this company because I believe so strongly in these stuffed unicorn dolls, right? And then something happens and no one likes unicorns. Unicorns, everyone's like, oh, we hate unicorns, right? I don't know who would hate a unicorn. Right, let's pretend this happens. If this happens, right, I can lose my money. If the unicorn company goes out of business, every dollar that I paid for those shares does not exist. I lose that money. So you need to make sure like something you're picking has like a market or is like something you know people need. So a lot of times people will want to invest in companies like Apple because they know it's doing really well, which drives the price up, right? Kind of like that supply and demand thing we were talking about. There's a higher demand for it, right? More people want it. So, when people sell their stock, if everyone gets nervous, right? So if everyone, let's say someone gets really sick at this table, and so Jeffrey gets sick, as you're already demonstrating. Jeffrey gets sick and throws up. No one wants to be at this table. They are gonna sell. They're gonna want to trade seats, right? This table's value is going down. It is not worth as much. No, I mean, it used to be a great location. It was by the board, but you had more space because you could kind of lean back this way, right? It was a nice seat. You guys like this area. But as soon as he gets sick, you do not want this area, right? You're willing to trade. You're like, yeah, I'll take the back corner. I don't want to be anywhere near this, right? You're willing to trade because circumstances change, because maybe in a negative way. So stocks don't always work in a good way. They can go down, they can go up. What if I said only this table gets treats, right? Or I bring in ice cream and say, oh, I only have enough for this table. Everyone's gonna want to trade. Everyone's gonna be like, I want to sit at this table, right? Excited. Yeah.
So, can't you technically clean up?
Right, you can clean up the illness, right? You can clean up the throw up or the vomit, right? And some stocks, again, bounce back. So maybe once it's cleaned, everyone's like, oh, we do want to come back. But for a while, their seats are not worth as much, right? They all owned a fifth of the table. No one wants to sit here, so this one has lost its value. When a company goes public. So when a company goes public, the owner of the company decides on how to split the company's power, right? So they decide how many shares they want to sell, how many shares they want to offer. Walmart can decide to increase their shares and give out more shares, and then their other shares are worth less, right? It just depends on how many little squares, right? How much you want to divide it up by. So selling stocks is when you do need to write. You need to pass it. Okay, so this is kind of anytime. The owner gets however much money the shares were worth when they sold them. So if I sell at that moment, right, when we saw that Apple was $532, that's all the money I get. But in the same regard, if I sell when it's $538, $6 extra I get. So this is why it's risky. The stock market is unpredictable. Do you guys know what Blockbuster? Do you guys remember like growing up and having Blockbuster? Yeah. Okay. So Blockbuster, like in the 80s when they began, someone came forward to my dad and asked him like, "Hey, we are gonna start this company. We're gonna rent movies to people." And my dad said, "Rent movies to people? That's the dumbest thing I've ever heard." My dad thought it was so dumb, and he was like, I'm not giving money for that. I don't want to buy any shares, right? This is in the very beginning when the company's just starting, so their shares aren't worth as much, right? And he could have bought a lot of them. He's like, nah, I think Blockbuster's, I don't think anyone's gonna want to partake in that. Then Blockbuster got huge. There was Blockbuster everywhere. My dad used to hate driving us to Blockbuster, like, all the time when we were kids. He'd be like, Blockbuster. As he was driving, he'd just like complain. He was frustrated about it because he's like, man, I should have invested in that. But then what happened, right? Innovation happened. Someone came up with a new idea, a new product. Now we have Redbox and Netflix. No one really goes to Blockbuster anymore, right? I've seen like one or two, but they're pretty rare. They're like
One's in downtown.
And I've seen
oh, did it? So yeah, there's not really a market for it anymore. So now my dad is kind of happy. He's like, yeah, that's right. I knew it went too well. He's like kind of, which is terrible that he's happy about their failure. But it's unpredictable, right? He did not think, like logically in his mind, he did not think it would become a good thing. He didn't think it was going to become popular. And in the same regard, Blockbuster became really popular, and no one could see until we created the next product, right? It's kind of how things go. It's unpredictable, right? When Blockbuster was doing well, people were like, yeah, this is going to be the greatest thing. And then Redbox came, right? So this innovation is creating things, right? That's why we need entrepreneurs, something we also discussed, right? People like Vanderbilt, right? When Vanderbilt builds his steamships, right, he has these ideas, this way to expand, the way to make it better. So the same with our stock market. New products, new things are happening all the time. Let's keep our shoes on our own feet. Yes.
Can I tell you something about Vanderbilt?
Yes.
One of his cousins or something, one of his family members. One of his family members was like he loved cars and he like set up like races in places. Like he like racing cars, and then he set up this race, and then he had 2 races, and then the 3rd race because he was trying to get like America to make better cars. Because like Europe and Germany and stuff, they had like awesome racing cars.
Okay.
And in his 3rd race, the car crashed into the crowd, and then there's like.
So sometimes being an entrepreneur doesn't always work. Sometimes you have good intentions, right? Like so Jeffrey was saying, a family member of Vanderbilt wanted to create a better car industry, wanted to create better racing cars. Doesn't always work that way. Yes.
So it's like.
Wait. Is this on topic with our stock market stocks?
Yeah.
Okay.
It's like the Lorax. Because he was like.
You and this Lorax.
Dude,
All right, let's hear it.
a movie where the monster, he was like, Mom, I'm gonna go be the best there is. And he travels so far and finds the perfect for it. What's this called?
Textiles, like fabric?
No, but yeah, he found like material. He found like perfect material, and then he made it all big, and then he killed every tree, and his business died. So he fell.
So he got too big, like he might have expanded too fast. Okay, so yeah, again, it seemed like it was doing really well, correct in the story, and then it's unpredictable. Go ahead.
Is like what you have to think about how the Germany and like all that. That's a good point because I like looked at it, and the stocks that are from like Asia and other places like don't make this for the stuff that like happens here. Like there's an episode, a Family Guy, and reference that really quick, and it's the one where it's like constructive republicanism is like the best way to go, and then he like does this thing where I buy everything American made, and then everything starts crashing.
Falling apart. Yeah.
And, so is that because there's like international? That's why Apple does better than like.
We'll get to that. So yeah, depends on the demand for your product, right? So even McDonald's, right? There's McDonald's, they're all over the world as well. They do really well because again, there's a larger audience. There's more people buying it. There's more of a demand. So they have to create a larger supply, which means they're making more money. So, stock market. Brene, I'll kind of get to your foreign stock markets, but for now, these are our American ones. Okay, so places, so stock market. This is a place where individuals or companies can buy or sell stocks. Now individuals. So I can go and buy stocks. You guys, well, someone would have to go on your behalf and buy stocks because you're not legally of an age. But when I was your age, my dad bought stocks for me and just put them in like an account and then transferred my name to him. So that's something that my dad did, and it was something simple. Like, I mean, I would just save my like allowance and every so often be able to buy them. Companies that'll buy them. So companies, there are large companies that will buy a group of stocks representing people. So that's what my brother's company does. They're called like a mutual fund, and he'll explain that to you. But a mutual fund, they buy a lot of different stocks that they know are going to be pretty successful. So it's not as risky. It's not so much. Most people kind of break even there. They don't lose too much money usually. So that's what it means. Not just individuals, right? Not just me. Like a company, like my brother's company, would buy stocks on behalf of people. So all stocks are listed on the New York Stock Exchange or the NASDAQ. The NASDAQ stands for National Association of Security Dealers Automated Quotations. These are one of the most important sources for companies to raise money. If you want to expand your company, quite often, boys over there, I need your eyes on me, stop fooling around with your shoes. Vivian, this is your first warning. Brandon, this is your second. Move your seat. Brandon, you can move to Neptune, or I'll let you choose filing cabinet. Okay, so this is a really good way for people to have the opportunity to be able to raise money for their company, right? So if I want to, say I have a company, again, my unicorn company, and I decide, oh, you know what, I'm going to have to branch out. I'm going to have to make other animals. I'm going to go with teddy bears. Teddy bears seem successful, and I know I can make the softest unicorn and teddy bear stuffed animals, right? So when I decide I want to branch out, I might come to this table and say, hey, I will sell you some extra stock in my company, right? So I might add a portion of stock to my company. I might create more little squares, right? More little grids to be able to do that. So this is a picture of the New York Stock Exchange. This is after the stock market has closed, or after the stock exchange is closed. If you notice, it's really filthy. There's like papers everywhere. People often will have printouts and lists of what they are expected. Now, to trade on the stock exchange, not just anyone can trade on the stock exchange. You have to have a seat on the New York Stock Exchange. Now, a seat is not figurative. It's not literally a seat like you bring your chair and you sit down. It's figurative. Now, the New York Stock Exchange, I looked it up. The highest a chair has sold for you to be able to sell stock on the stock exchange is $4 million. So they're pretty expensive. Average price right now, they go for about $1 million. People make money just renting their chair. If you owned a chair on the stock exchange and you wanted to rent it to other people, like rent it to allow people to use your chair, your kind of like official license, right? Leslie, you can rent it, and it's another way people make money. Usually people want to buy them. There's only so many available. So again, this is a commodity. This is something that's kind of rare. There's not as many. There might be a huge demand for it, but there's not a large supply for it. So when people own a chair, usually like a company will own a few chairs, right? So it's not as common for individuals to own a chair on the stock exchange. Usually they're corporations or companies that own a chair. This is the NASDAQs. Both are located in New York. I don't know what the NASDAQ particularly looks like. I don't know if you're allowed to go in. I don't know if you're allowed to go and watch. I think the stock exchange does have a place where tourists and visitors can like look down above, and the people are below like trading. But as a civilian, as a regular person, you're not really allowed on the floor, they say. believe the NASDAQ is the same thing. Okay, so, I've done a lot of talking. It's your turn to do some talking to each other. I want you to explain what the stock market is / how it works. So let's work with our same partners we worked with last time. If you lost your logos, you get to now be the second person, and if you won, you can now share first. Let's share with our partners. Go ahead. Unfortunately, the stock market does have times where it completely crashes and we lose a ton of money. There are two significant crashes that we're going to cover. The Wall Street crash of 1929. You guys know this. We read about this yesterday. And then the stock market crash in 1987. Sorry, I'll move that. So, Wall Street crash of 1929, known as Black Thursday, the Great Crash. This is when things got really bad. This is when it actually, everything started to spiral downward, we'll say. Because again, we say the market crashes when almost every single company is losing money. When almost every single person is selling, right? So let's say you guys, again, all owning shares in the tables. Let's say you didn't have to be in history right now or social studies. Let's say you had a choice. So in this choice, whether or not you're going to be in social studies, thank you, sir. You decide that you're going to sell your share. You're going to sell your share of a share, right? So let's say all students everywhere get a choice to be in school. And they decide one day, they're like, you know what, I don't want to learn. I don't need education. I don't need this, right? And they sell their share. They sell their share, and they just all try to pull out, right? Well, the school would close. We'd have no students. If we have no students, how can we function as a school? So that's basically what happened when the stock market crashed. Everyone pulled out. Everyone took away their money or tried to sell their stock and get rid of it. But to the point where now no longer do people want to even buy stock, right? So now people are, please buy my stock, and no, I don't want that, right? This collapsed, right? Prices went downward. They decreased for a full month. The Dow Jones Industrial Average, that's what they are always kind of showing, one of them for the NASDAQ. This one fell dramatically by 22.68%, 22% basically, 23% in one day. That's huge. Those of you that have iPhones, if you ever accidentally do that thing where you scroll down, right, or you accidentally swipe it and it goes down and it pulls up all these little numbers and letters and you have no clue what the code is, right? This is for stocks. When it's red, it's negative, it's not doing well. Apparently the NASDAQ, the one I showed you today, was down. When it's up, right, when it's green, it has a plus, that means it's increasing. Oh. Google lost money today. They lost 11.58, so $11.58. Right, so it has all the little stocks. Yes, ma'am.
This morning I was talking about Mr. Jessica's term about the stock market crash in 1929 with my grandfather. My dad stepdad was telling me about how what happened. It was the three guys. It was the first dude who did the other thing. It was the three people, anyway. And then it crashed because
I want us to be able to have time for our summary. Can we table this for tomorrow?
right, yeah, I
I'm
referenced
sorry.
it. That's
Tell me tomorrow, though, if you want to hear. We'll talk about risks tomorrow. I want you to summarize. I want you to summarize the stock market. Make sure to use the words share, majority shareholder, ticker symbol, and going public. I'll pass out a half sheet of paper. Just put your name and write these on here. You just need to explain to me what the stock market is using these words, though.
All of them?
Yes, all of them.